Tata Motors is also in the news today. The stock of the auto company surged as much as 8% after multiple brokerages turned positive on Tata Group stock and eventually revised their target price upwards. Following, of course, the release of the automaker's global wholesales data. Now, Tata Motors, of course, which owns the brand JLR globally, the global wholesales, including that of Jaguar Land Rover, rose by 8% year-on-year in the fourth quarter of FY23. Now, last week, of course, Jaguar Land Rover reported a 24% Y-on-Y jump in wholesale volumes, and this is excluding the volumes coming from China. And this was in the January to March quarter, while retail sales grew 30% as chip and other supply constraints also eased off. Joining me in the studio now is my colleague Suyash. Suyash, thanks for being here on Business Plus. It seems multiple brokerages have turned extremely bullish on the stock. What are these brokerages really saying?
Yes, Kartik. So, a lot of multiple brokerages, including domestic and foreign brokerages, have turned bullish on the stock after the robust wholesale data came out. Now, so Goldman Sachs has upgraded its rating to buy, factoring in the improved volume expectation for JLR. Now, Goldman has raised its price target to 550 rupees a share from 480 rupees earlier. This implies an upside of 19% from today's closing of about 461 rupees. Nomura India is another one which is bullish on Tata Motors. It has a buy rating on the stock with a price target of 508 rupees. Along similar lines, BofA Securities also maintained a positive outlook on the company. It sees a case for accelerated deleveraging for the car maker going forward. Now, this means basically that it will reduce its debt burden moving ahead.
Okay.
So, BofA Securities has maintained the buy stance and has given a price target of 475 rupees. CLSA is another one which is bullish on the stock with a price target of 544 rupees. JP Morgan, on the other hand, has a price target of 438 rupees. Now, these were the foreign brokerages. Domestic brokerages, which is Motilal Oswal, has a buy rating on the stock of about 525 rupees, implying an upside of 14% from the current levels. Now, Motilal Oswal sees recovery in all three segments of Tata Motors, which is the Indian passenger vehicle segment, the Indian commercial vehicle segment, and JLR, right? But Motilal still has warned about the supply side issues, and it says that it will continue to remain a pain point for the company and for the industry at large, which may delay the recovery process.
Okay, so we'll come back to you, Suyash, with a mood on the markets also. But before that, Rakesh, if I can just come to you, we've seen Tata really getting into overdrive, zipping through the fast lane, overtaking Hyundai to become the number 2 player in the Indian market. Of course, number 1 is difficult to replace with Maruti Suzuki having the largest share of the market and the consumer. But what does this tell us about Tata's resurgence almost ever since it picked up JLR? We've seen new models arrive, whether you talk about the Harrier or you talk about even a small car like Tata Punch, and even their EV foray with the Nexon. So what does it tell us about Tata Motors really taking the consumer through a lot of positive surprises in its new launches?
Kartik, Tata Motors is a very interesting case study for anyone who wants to study management, who wants to study consumption, and who wants to study the India growth story.
Right.
You remember, Tata Motors came with a bang with Indica.
Which soon became a taxi, and was
taxi.
not something that consumers like you or me ever wanted to buy.
But Tata Motors was not unhappy so long as the numbers were coming.
Of course.
And then the big hype about Tata Nano,
right,
which became a dud, unfortunately.
Yeah.
Despite all the
Nano success on that project.
Nano success on that project, despite Namo being there.
Right.
That was this big political statement when Mr.
Of course, moving
Modi,
from Shringor to
absolutely to Sanad in Gujarat,
right,
was a big story, but that didn't keep pace. There could be an academic debate on why Nano went bust, but probably, despite the price, it's a great study in terms of India being a hugely price-sensitive market, yet not going for a 1 lakh rupee car. Because by the time the car came, there was a lag. People probably had moved on, that's one of the explanations. The other big thing is post that Tata Nano was a laggard.
Yeah.
It somehow lost steam. Nobody was talking about Tata Motors, and everybody felt that it's moved off the leader bracket. And then came innovation, and then came new ideas. I think disruption, whether it's Reliance through Jio or Tata Motors, I think disruption is defining today's business, mantras. And all that leads to a growing demand from the consumer, ye dil mange more. So, if Nano was 1 lakh rupees, but not a great value for money in terms of the quality of the car, Tata really reimagined its entire portfolio. So the EV success belongs to Tata in this country. So, someone said 4% of the total cars sold in India are now EV, which is a small number, but given that it's a new idea, it's a good number to start with. And in that, Tata Motors is the big driver. And second, SUVs, they really kept pace with some very, very engineeringly strong products which have found fancy with the consumers. And now, if you look at the last fiscal, which we closed on March 31st, Kartik, for a couple of months, Tata had moved ahead of Hyundai. But now, they closed the year just about 30,000, 5.36 lakhs and 5.6 lakhs. That's the Hyundai and Tata Motors sales. But that's fairly good for Tata to come back into the top 3. And going forward, I think they have a set of few more products coming in, which probably they know that they'll do well. And the other good piece about Tata Motors leadership they should be happy about is that for 3 years in a row in the COVID times, they have clocked more than the industry growth rate. This year also they're at 46%. Of course, Maruti is miles ahead. So in that sense, I would assume that Tata leadership would be very happy if they are a stable number 3, giving sleepless nights to Hyundai.
Okay, sleepless nights to Hyundai. Well, let's hope that happens because more choice, more tightly fought battles always augur well for the consumer at the end. But Rakesh, I want to talk to you briefly about the chip shortage also and the overall supply chain constraints that not just Tata but the entire auto sector is really inundated with right now. What do we do in a situation like that? Of course, prices have become higher, cars have become expensive, waiting period has elongated, and yet there seems to be no real resolution to the supply chain constraints that the entire auto sector is facing. And that's the reason that Suyash had also just mentioned, Motilal Oswal sort of, giving these disclaimers along with the target price that it is watching the, the chip shortage and the supply chain constraints very tightly. So where is this entire, battle for chips headed?
I don't have an immediate solution, but I think the industry should get together. It's not just about getting some price reductions that Siam is working on, or Maruti as a leader is saying that Indian cars need to be priced less. We should not spend so much money on airbags. We should not spend so much money on other safety measures. So far, so good. But the problem is that if we don't collectively address this chip shortage, the market leader is going to face the worst. See, Ertiga, their best-selling car in the so-called MUV or the multi-utility vehicle or the family SUV as it's called, they have a 1-year waiting period, I'm told so. Yeah. Which is, if the best car they're doing has got 1-year waiting period, I'm sure they should be very unhappy about it. But is the industry collectively unhappy? And what is the government doing? I'm sure there have been some noises here, there, and there in the conference rooms, but there is need for a collective push to get the EV, get the chips back on the table.